Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 184 on 22nd of February 2022. So markets was full of action today on the back of again overseas cues. Nifty opened down by more than 2.5%, and the second half of the day on the back of US futures rising back, Nifty gained back significant part of the losses. Bank Nifty, however, was weaker and did not recover as much as Nifty did. In terms of the sectors, again, real estate, PSU banks, metals, IT, everything was smashed down. Only energy, auto, and some consumption stocks fared a little better, but pretty much the polarization has been on two fronts. One is, of course, small caps being smashed much more than the other segments of the market, and then within the sectors, the more sort of defensive stocks, defensive sectors like FMCG, IT, and pharma also getting smashed. So that is a very, very surprising development here, where the FIIs continue to be on the sell side. Yesterday also they sold about 2,500 crores worth of Indian equity, and they have been on a selling spree for many months now. It is only the domestic liquidity that is countering this sell-off. But if the sell-off continues and the market also kind of tailspins into some sort of a correction, then the domestic liquidity flows may also dry up, and March is a month of lackluster inflows usually. So it remains to be seen how this next 6 weeks will play out. The Ukraine front that is being keenly watched, that is currently not subsiding, that narrative, and crude oil is at $99, Brent is at 99, and that above 100 is going to create ripples again. So no easy path ahead as of now, but the markets correcting from the highs. If it were not for Ukraine, it may have been something else, but a correction was due. We can say that in hindsight. Hindsight is always 2020, but nevertheless, we all knew that after this ferocious 1.5-2 year run, some sort of a cool-off and consolidation is due, and that seems to be the order of the day as it stands now. In terms of the internals, small caps, as you can see, were down almost 2%. They were down more in the morning, but recovered a small bit. Mid and small cap index also down 1.25%. Broader market, CNX 500 down 0.75%. Nifty also down 0.67% net, and Nifty Next 50 was doing well with some Adani stocks doing well in that segment, down only 0.2%. In terms of weekend investing strategies, barring NNF10, which gained 0.9%, and EverGreen, which remained in the green, primarily due to its exposure to gold also, and MI All Cap at minus 0.34%, ATH at minus 0.38%. These were notably doing better than the underlying indices, but MI20, MI35, MI50, which have small cap components, MI25, all were battered down about 1 to 2%, and MI ATH2 was down minus 1.25%. So all in all, a tough week that is going on. This week we have lost anywhere from 1 to 6% on several of the strategies. In terms of the market movers, top gainers above 1,000 crore market cap today were KIOCL, IB Real Estate. IB Real Estate was down yesterday on back of those raids. Today it seems to be a relief rally. Apollo Pipe is up 9%, Next Digital 6.5%, KPIT was very strong at plus 5.7%. Why we are showing this is so that people who are following relative strength in the market, or if you're doing your own trading, you should be able to, dig deeper into these stocks and see why they bounce today in a down day, and maybe some of these have merit in terms of following or being in your strategy. Top losers remained Dhani, which was down 20% yesterday. Also, this is a really bad chart, and I'll just show it on the trading view charts. JP Power was down. Repco Home, uh, Astra is. I'm not sure which stock is this. Datamatics was down. Datamatics has been very strong in the last so many months, but that is also sort of giving way. Uh, Another key factor here was that Nifty in the morning opened below the 200 DMA, but it bounced back very smartly. In the last two occasions where it came close to 200 DMA, also there was good bounces. So it is very crucial that as the price tends to bounce against 200 DMA, maybe one day it may just break down and go lower. We had very good consolidation in this area around 15,600 in the months of May, June, July 2021, and this support that we have near about 16,400. So 16,400 and 15 sort of 600 to 16,000 bands. These should be very good bands. 16,800 of course is the immediate support that the market has, and the way it has bounced today, it does seem like there is some support at key levels that are emerging, but one should also see this next chart, which is the Dow and the Nifty plotted together. The Nifty is jagged because I've taken Dow futures, and the jagged edges are due to the Nifty different times of closure. But you can see very clearly that in the last 10 days, this is from Feb 10th, 11th till today, about 12-13 days. You can see that we are just mirroring, the orange line is Nifty. We are just mirroring the US markets primarily, and the US markets have broken down from the 200 DMAs. Let's go to some charts and we can see that. 1 second. So let's go to S&P 500. And let's plot the 200 moving average daily chart. And let's set the length to 200. So you can see here that the US market has breached the 200 DMA in January, then it went back above it, and now it is struggling to maintain above it. It has tried couple of days earlier this week on 15th and 16th, but it failed below that. So only once it crosses this 200 DMA and it stays above it can we really say that this 200 DMA support has worked. Other than that, it does seem like a bit of a consolidation phase, and below I would think somewhere around this 4232 is very crucial, because there you will see a head and shoulders pattern getting formed here, this shoulder and this head and this shoulder. So that may precipitate a lot of fall if that happens, but so far that is not really the case. If you look at the small cap index on our markets, let's say small cap, just to show you that the small caps have been languishing. There is some delay in my computer, so oops. So you can see here that small cap index also tried to go back above the 200 DMA but failed, and is now uh, somewhere around this support level uh, of 98.42. But whether this holds or not, so this is pretty grim situation, I would say. But the optimism can come from the fact that we are already so far below the highs, about 18% below the 12,000 highs, that we may get support near these 2018 highs. Uh, if the stock market has from the peak of 2018, and we are now nearing first quarter 22, so uh, almost three and a half, almost 4 years from here, and we haven't really gone anywhere. So the stock, this performance of small caps has not done very well, actually. But I would think that this is a reasonable uh, drop immediately, and there may be a situation of it coming close to some oversold level a bit far away. But once it sort of dips below the 30 RSI, I would imagine that there will be some bounces at that point. But this is all conjecture, and this is all to basically showcase where we are, and of course you will have to add your own studies and see how this pans out for you. I'm only introducing the current situation here. So this is all I had in the daily bite today. Thank you so much for watching, and we'll do another video later in the day, which will be more of a content based on data analytics. So wait for that later in the evening. Thank you so much. Bye.